and you have Asian markets which are largely higher this morning.
But I think it's going to be a big day. Straight away 250, 300 point kind of gap up start, and then we'll take it from there.
I think the U.S. economy's proven to be quite resilient. I think inflation is coming down.
So to my mind, next 5 years, from a stock market perspective, will be the real Amrit Kal.
1.5% higher is what we have on the Nifty.
So I think globally as well as domestically, stars are aligned for stronger economic growth.
There is likely that RBI will have to revise its growth forecast marginally higher.
तो एंटी इनकम्बेंसी ये शब्द irrelevant हो जाता है.
The BJP sweep ensures that the bull party continues on Dalal Street.
The growth valuation construct for India is looking extremely solid right now from a large cap point of view.
In fact, the main roads in KK Nagar, Ashok Nagar, West Mamdam, T Nagar, all of them are inundated.
Going on to be a great day for the markets.
You're with us here on a fresh new edition of Closing Bell. That's the last, full day which has come up on your screen. We called it Super Monday right at the word go at 8 in the morning, and what a Monday it is turning out to be. And by the way, we are back almost at the day's high once again, 350 odd points higher. This is Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Good afternoon.
Hi, afternoon. Let's get the Super Closing Bell show started then.
You know, absolutely. And just a few things, right? In the morning at 8 o'clock, we basically said 2 or 3 things. One, the sector to watch is public sector. I mean, actually, PSUs and PSU banks in particular. PSU bank index is the top gaining sector across the board. I mean, 3.5% of the public sector bank index, and private bank index is up 2.5% the last I checked. That's one. The Adani Group stocks is the other pack which we sort of mentioned, which perhaps should be off to the races, and that is absolutely true. If there was an index to reflect what's happening to the Adani Group as a whole, I mean, I think you'll see that there would be a solid, a 10-12% consolidated move across the board. So that the entire pack is up and about in very large volumes. If you sort the top gainers by volumes, the top 6 or 7 names are all Adani Group stocks. So there is a fair bit of buying which is taking place. And the last thing, which is very natural, is to wonder whether with a 300-point kind of a day, what next, right? So long term, I think there is near consensus that things are going to be on the upward trajectory. There perhaps will be intervening pullbacks, etc. But in the near term, what happens? So there, I mean, what comes to use, and a data point we put out in the morning as well, is that sentiment indicators, etc., become useful. And one of the things which, I think we'll have to update the numbers after close is that FII sort of positioning in index futures was short, some 47,000 contracts. At the last peak, when the Nifty topped out in July, mid-July, 20th of July, the long position had become 1 lakh contracts. We are at minus 50, and the Nifty topped out at plus 1 lakh. So there is some distance to go. We'll of course have this number will change dramatically. How much, etc., we'll know by the end of the day today, and we'll put that out tomorrow morning when we come back. But it just, even in the near term, there's no real reason to believe that there is any large sort of, a drop-off, etc., which is coming because there is enthusiasm which is going to last after the weekend election results which came through. 20,600 plus is where the Nifty is at. Reema.
All-time high levels on the Nifty, Sensex and the mid-cap index, and the banks are almost getting there. The Nifty banking index is outperforming. It's up 1,200 points, and it's seen a rally. It's seen the rally pick up, the momentum pick up in the second half of the trading session. And now the Nifty bank is less than 300 points away from its all-time high levels of 46,369. We're at 46,100, so about 250 points left for the Nifty bank to scale that summit. And individual banks, look at the top gainers: ICICI Bank, State Bank of India, Kotak Mahindra Bank, HDFC Bank. Hefty rallies seen on these large cap banks. In fact, there was this Kotak note which came out where they said that amongst all the sectors, it's only financials where valuations is still at fairly reasonable levels. And that's the scorecard they've given out. Valuations pre-COVID for banks like HDFC Bank or even a State Bank of India, a Bajaj Finance in the NBFC pack, or even an Axis Bank were much higher than what they are today, which is what gives a lot of investors comfort. Oil marketing companies continue with their up move. HPCL up 8% today. Year-to-date rally now extends to 50%. It's a 40%, 35-40% rally for BPCL IOC now since the beginning of 2023. And the Adani Group stocks, that's the other leg of the market which is firing. Adani Ports, Adani Enterprises, ACC, Ambuja, all the 10 listed companies are showing you some handsome gains. And now the capitalization, the combined capitalization of the Adani Group stocks has crossed 12 lakh crore. It's still not back to where it was when the Hindenburg research report surfaced at the beginning of the year. At that time, the combined market cap was about 19.5 lakh crore. But from the lows of 6.8 lakh crore, we've practically seen the market capitalization double this year.
Well, indeed. Rima, one big positive today, I think, is we started with a gap up of around 330 points. And quickly, in the first 20 minutes itself, we were up 250 points. That dip has got bought into, and all through the trading session, you have seen buying. And as you speak, if someone told me at the start of trade, you'll be opening 330 points and getting into the last start of trade will be up 360 points, well, you'll say that's really wishful thinking. But that's precisely what's happened. So post-market hours, we're looking at two data points. One is the kind of short covering that we've seen. The second factor is I expect to see a rather large institutional buy number, just going by the data and going by the way the banks have been performing as well. And the Nifty Bank outperformance, well, that's key to this rally sustaining. Because let's pull up two charts for you. One is the last 7-day charts. After a while, you're seeing that the Nifty Bank actually is outperforming the Nifty. The Nifty is up roughly around 4%, including today's move, while the Nifty Bank is up closer to around 6%. So that's the last 7-day chart that should come up for you on the screen. Big up move is what we're seeing on the Nifty Bank. And year to date, actually, the Nifty Bank was the sore point. That was the biggest underperformer. So year to date, if you look at it, even after this kind of move that you've seen, close to 6% in 7 days, still the Nifty Bank actually is lagging what the Nifty has done. Goes to show prior to these 7 days, the kind of underperformance you're seeing from the Nifty Bank, and that's 30% of the index you wanted to outperform. Next up, you pull up the advanced decline ratio. Well, that's been some kind of skewing in out there because at the start of trade, it was close to 20 stocks that were advancing for just one stock that was declining. Now, both those two, well, they've got a little bit closer to each other, but still you have more number of stocks advancing. So you like the screen on all parameters is looking good. The Nifty at the high point of the day, the Nifty Bank coming to the party, and more number of stocks advancing than declining from the broader markets. Mitesh Thakkar joins us to tell us his take on the markets. Mitesh, well, someone carried that long position all through last week. Well, they'll be celebrating. We are seeing a more than 1,000-point rally. What's your view on from here? I mean, if you had to keep a trailing stop loss, where would that level come at? And also, if you could fill us in with your stock picks.
So, Nigel, I think that's right. If somebody had longs, it's been a market which has rewarded the long side very strongly. But also is the fact that, breaking into all-time highs, especially for the Nifty, the Bank Nifty is yet to do that, but suggests that the momentum will remain on the upside. So now this from a market which is moving upward, doing some consolidation in that range of 19,850, 650, it's gone into momentum zone, which means that the rally could be fast and extend. Giving targets in the new range is always difficult, but I think a good way to approach, as you rightly pointed out, is to trail your stop losses, and the current level would be around 20,400 to about 20,390. That's the support pivot on the moving averages side. So on the hourly chart. So I think, just keep a stop 10, 20 points below that and maintain long positions. I have a buy on Bajaj Finance. That's, I think, breaking out nicely after a long time. So buy here with the stop at about levels of 73.70 for targets of 7,500. And IndusInd Bank is the other one, which I like. I think that's a buy as well. Keep a stop at about levels of 14.75 and a target of 15.50 can be looked at.
Sorry, just one. Any other Adani Group stocks? I mean, if you can look at it chartically, Mitesh, anything looks good from here?
I've had buys on Ambuja earlier and Adani Enterprises. In fact, the entire group looks good. But I think, something which I've missed up on and can be bought afresh is Adani Ports. I recommend buying here with a stop at about 855 and a target of 920 on the upside.
Got that. Let's focus on two particular stocks which are buzzing on the back of fresh initiations by brokerages, Nuvama and Federal Bank. Sonal is here with the details on that. Sonal,
Thank you for that. Well, two stocks on my radar. Let me start with Federal Bank first. There's a Nomura initiation on the stock. They have a target price of 190 rupees a share. They say that the enhanced focus on unsecured loans will drive structural NIMs for the bank going higher. New segments should also give bank a leg up on loan growth. So they see the bank delivering a 19% loan CAGR. This is from FY23 to FY26 versus 14% that they did in last 5 years. There's best-in-class retail deposit franchise and strong asset quality track record, which is the best and the core operating features of the bank as well. They see the bank delivering a 22% PPOP, which is pre-provisioned operating profit CAGR over FY24 to FY26. They also see the bank delivering 17% profit CAGR over the next 2 financial years, with ROA stable at 1.2% and return on equity at 13 to 14%. So that's about Federal Bank. The stock is doing well. Nuvama is the other one on which Citi has initiated coverage. They initiate a buy with a target price of 4,110 rupees a share. The stock has been doing well and adding on to those gains today. They say Nuvama is in a sweet spot to leverage on growing formalization of managed wealth in the country. Capital market business for the company proves to be seeing a flywheel impact, and it has multiple synergies with wealth, even if it poses some earnings volatility risk. And they go on to talk about the risks as well that the company could face. One is rising competitive pressure in mid-market wealth and earnings volatility in capital markets. Also, they talk about their AMC business, which is scaling up because of strong product pipeline and the tie-ups that they have in space. So these two stocks are doing well on the back of these brokerage notes.
Okay, thank you very much for that. Not often that we talk about Nuvama Wealth. We will slip into a very short break. Before that, actually, we have Dipan with us on the show. Dipan, do you look at Nuvama?
Good afternoon, and thank you for having me on your show. Not specifically that company, but we are very positive on the wealth management space and have a very positive view on Anand Rathi Wealth Management, as well as 361, which is the wealth management company, which was spun off from IIFL. And the way the wealth effect is taking place within India, and there's more and more propensity to go to advisors from the HNI class of investors, means that these kind of businesses, wealth management businesses, have got a great secular growth story over the next several years or so. And thankfully, I think all of these wealth managers are going more and more towards kind of revenues which are more scalable, at the same time, which are annuity type in nature. So irrespective of the market movements, they are assured of their revenues. The real challenge, of course, is maintaining the talent and upgrading them. But these companies have been doing a good job around that. So although valuations may be slightly on the higher side, I think there's good earning visibility and excellent scope for increasing earnings per share on a continuous basis for the next several years.
Okay, all right. Well, got that, Deepan. By the way, before we slip into a short break, I just want to pull up the Nifty Bank and HDFC Bank. That's the one that's really done well in the last few minutes. It's up closer around 3%. And that's the one that actually was underperforming. Year to date, HDFC Bank has been a big underperformer owing to that merger, owing to those rough ends getting sorted out. But now the largest weight on the index, that moves, and that definitely helps the markets move up as well. That's the Nifty Bank. Pull up HDFC Bank. The large constituent in there was hovering around that 1500 for long. Well, that's as well moved to around 1600 odd.
Okay, well, that's a big move coming through. It was under 1,500 a couple of days back. Deepan, any thoughts here? So many people that we've spoken with since the morning have mentioned financials as the top idea. Public sector banks and private too. And I mean, if the bet is that after this, FI is start to come back in full force, the big money will go into the big stocks, the large caps, and banks are top of the list there. So your ideas in that space?
Yeah, Prashant, good afternoon. I completely agree with that thesis. And clearly, I think if you look at the entire spectrum, based on risk return profile, based on earnings visibility, banks and NBFCs are perhaps the only sector where there is some margin of safety, and you can invest, keeping in mind that if you have a 2-3 year type of a view and the NPA cycle doesn't turn negative, then these companies can show compounding returns, and therefore you can have compounding returns in your stock price investment as well. So positive on these companies, they have been laggards. The only issue with the banks and NBFCs was over ownership. And as we analyze so many portfolios of investors, a large portion of their investment is in bank NBFCs, preventing them from buying further. And I completely agree that unless some fresh money comes from abroad, these stocks may not start to outperform. So let's look at what the FI numbers are for the next 2-3 days this week itself. And if that trend becomes more and more effective, and we see more and more FI flows coming into the country, then I'm pretty certain that the Bank Nifty will turn out to be the leadership sector within the equity markets.
What about oil marketing companies? We've seen a 40-50% rally in HPCL, IOC and BPCL since the beginning of the year. The under recoveries this year are likely to be lower, but there is always that risk of pricing ahead of a general election. Now, with the big rally behind us, how would you approach any of these oil marketing companies?
We've not been great fans of the oil marketing companies, but there certainly is a trading rally which is possible in these companies on two counts. One is that crude oil prices have remained stable, and two, they are the last ocean, I would say, islands of value investing, in the sense that they're still available at low single-digit type of price to earnings multiple, at or below book value, and very high dividend yield. So for investors who are looking to get some money to play in the market without getting too worried about very high valuations, then maybe oil marketing companies are the only sort of haven left for them to invest in. And there's a good expectation that oil prices will remain stable or slightly declining, which means that these companies will report exceptional numbers going ahead. And the last point I want to make is that companies like BPHP and IOC, especially BPHP, large expansion plans also are going on stream, which means that their reliance on buying the diesel and petrol from outside refiners may go down, and they may get benefit of the refining margins as well. So there's a great trading rally possible in the oil marketing companies, and definitely a PE re-rating kind of a situation. But I'm not bullish on these companies on a longer term frame, like 3 to 5 years or so.
Deepan, any of the Adani Group names you like?
Well, you should start looking at those companies all over again, and depending on where the valuations are. But I think more and more I think about it, Adani Ports certainly seems to be in that zone where one could look at it in a positive light. Valuations seem to have been more or less corrected over there. And it's a great annuity business, and all the new ports which they have acquired, I think there's a lot of scope over there for improving the cash flows over there as well. And also, I think over a period of time, the risks around leverage also seem to have come down. And if Adani Wilmar is sold by the Adani Group and that goes towards debt repayment, then I think that will further improve the sentiment in Adani Group companies per se. But right now, if you ask my real opinion, the reason why these stocks are doing well is because of a tremendous trading interest in these companies. From what we understand, that the shareholding pattern is pretty concentrated, and there's a heavy trading interest in these companies. So even small amounts of buying can have this exaggerated move, and it can work on the downside also, as we have seen earlier in the year.
All right, Deepan, you don't like cement. You have told me that in the past. But there's a party going on in cement. You know, a lot of these smaller companies getting gobbled up by the larger ones. And maybe, in fact, getting into the elections, you'll see cement demand that will pick up. Offtake as well will take off. And maybe, in fact, if there's consolidation, then pricing power comes back to them. You still want to give that a skip, or do you think that it's time to maybe allocate some money out there?
Imagine there are so many parties happening. You need to be careful and choose which parties you want to attend over here in this capital
So this
market.
is not the party you want to attend, no. Then, Deepan.
My favorites are more the pharmaceutical companies, tech companies, consumer-oriented businesses, even capital goods and financial. So I have my hands full with these companies, and no doubt, I may have got the call on cement wrong, and certainly they have rallied pretty well over the last few months or so, and the growth dynamics have improved. But I just can't get over the fact that if the capacity is going to go up by 30-40% or so over the next 2 to 3 years or so, how that will, play out for the industry, and whether they'll be able to absorb their expanded capacity. I mean, all is looking fine at this point of time, but whether cement demand can grow to take care of these expanded capacities is the question to which I don't have an answer to.
All right, Deepan, we'll leave it there for today. Thank you so much for joining us. It's a big day, and interesting views and interesting chat as always. Thanks indeed. 375 points is what we have on the Nifty, 20,644, and it's all guns blazing for now. We will slip into a quick commercial break here. As we do that, here's excerpts of some of the conversation from CNBC-TV18's IBLA Awards, which were held over the weekend. Commerce Minister Piyush Goyal spoke about the electric vehicle revolution in the country and how it could sort of act as an impetus to get more foreign direct investment in the country from players, global players like Tesla and others. Listen in.
I feel strengthened to say that that is right before my eyes. Another 7 years, and every new vehicle sold in India will be an electric vehicle. Can you imagine the game-changing dimension to the national economy? Yes. When we reduce our crude oil imports, when our petrol diesel consumption comes down, imagine the strength the Indian economy will have. Imagine the reduction in carbon or the fuel smoke that we see all over the country, all over the cities. So I do believe we are well on track. Tesla cannot afford to miss the bus. They will want the large domestic Indian market.
Welcome back. Well, the markets are looking very, very good, actually. Even in the broader markets, you have a couple of stocks, actually, that are moving currently to the high point of the day. Shriram Finance, I think that's one stock that's spiked up. Torrent Power as well, it's come off the day's high. But Indian Hotels as well, that as well has moved up a little bit in the last few minutes. So keep an eye out on that one. And from the frontline names, I think the Royal Enfield, that's Eicher Motors, that's just moving from strength to strength. Big spike on that one. Let's focus on a couple of media stocks. They're in focus today on the back of a downgrade that's coming in for both stocks. That's Zee as well as Sun. Nimesh joins us to fill us in with more details. Nimesh?
And Ajilena, it's an unusual day to talk about downgrades on a day when the indices are up 2-3% and big rally in the markets as well. But nevertheless, that's media stocks. Both Sun TV and Zee TV has seen a bit of a downgrade. And that report has come from the UBS, and they believe that the TV ad revenue growth is past its inflection point, and from here on, they're going to rapidly underperform the GDP growth as well. Remember, for both Sun TV and Zee TV, TV ad contributes nearly 70 to 80% of their consolidated revenues, and they believe that the growth will only disappoint going ahead. So, on back of that, UBS has downgraded both Sun TV and Zee TV today. On Sun TV, they have downgraded the stock to sell now from neutral, and they have a target price of 600 rupees. They believe that the IPL is priced in, and there are lack, and now it lacks further catalyst, positive catalyst going forward for Sun TV. In fact, the advertising revenue seems to be the past, and there could be no further gains. And broadly, while the IPL revenues are played out, they say it's difficult to time the media revenues. So I mean, largely to see the movie revenues going forward. So that's on Zee. They've downgraded to sell. And on Zee TV, they've downgraded the stock to neutral now, and there they have a target price of 260. Even for Zee TV, they believe that post the recent rally, the merger-related news is largely priced in at current levels, and they see that ad revenues to taper from here on. In fact, they expect only 3 to 5% revenue growth, ad revenue growth in the medium term for these television companies as internet and smartphone penetrates further. So, lack of ad revenue growth will be a key catalyst downside for the media names, and hence a big downgrade on Zee as well as on Sun TV today.
Elections notwithstanding, right? I mean, the general elections are in front of us, but I think UBS is making a slightly longish kind of call here. Nimesh, thanks very much for that. Nimesh, of course, comes back a little later with D Street chatter. But a public set of banks, right? I mean, the Nifty PSU Bank Index is up almost 4%, and that's the talk of the town. Really big moves. Ritu is here with just a quick look at what the stocks themselves have done and how are valuations looking relative to historical averages for each of these names. Ritu, take it away.
Well, Prashant, if you look at the 5-year historical average, and I've taken the top 5 PSUs and I'm comparing them with the top 5 private sector banks, it's with the exception of Kotak Mahindra Bank and HDFC Bank, across the banks, so you'll see valuations are not actually cheaper when you compare it to the last 5 years. But that said, given the market rally that we've seen that banks have largely stayed out of, and now you said today the PSU bank index, of course, up almost 4%. One questions whether banks are finally joining this rally. So a quick look at the valuation, starting with State Bank of India, the current valuation at 1.29x, and this compares with 1.17 as a 5-year average. The stock actually in the last 1 year is down 2.8%. In the case of Bank of Baroda, again, the current valuation at 0.95 price to book value compared to the 5-year average of 0.57. The stock has performed well, about 22% up year on year. Union Bank of India similarly 0.94 current valuation compared to 0.44 as a 5-year average. Canara Bank 0.90, Punjab National Bank 0.87. Now, these are the valuations as far as the public banks are concerned. Again, comparing them with their private peers, which are, of course, much higher valued, with the exception of HDFC Bank and Kotak Mahindra Bank that are actually below their 5-year averages. ICICI Bank currently at 2.96 compared to its 5-year average of 2.43. You have IndusInd Bank at 1.99 price to book value today compared to 1.89 in the last 5 years, and Axis Bank at 2.41 compared to 2.05% in the last 1 year. Stock performance also, private stocks have been, private sector banks have been underperforming the markets. HDFC, Kotak Mahindra Bank have all been down compared to the same period last year. ICICI Bank up about 5.2%. IndusInd and Axis Bank have performed relatively better. IndusInd up 26.97% and Axis Bank 22.95%. Now, the question here is that the stage is set. Credit growth has been strong, balance sheets have been cleaned up, non-performing assets have come down, and here public banks have particularly performed better. So the question then is, if it'll be further rough from here, and at the current valuations, they do look quite attractive.
Right, Ritu, thanks very much for that. And that's essentially what many of the market sort of guests that we spoke with believe so as well. So, for example, Prashant Khemka is one of the largest fund managers in the country. He runs White Oak Capital Management, and financials is really his top bet. Listen to why.
In a lot of global investors who were sharpening their pencils and wanted to be ready after the central elections, I think would prepone their decision making to maybe this month or next month, as it's around year-end time frame. Market has formed up over the last November itself was a very solid month. And now with the outcome over the weekend, I think it can gain further strength from here. Financials has so far not participated as much in the rally this year, but I think they're very well poised given all the environment, the economic environment that we talked about.Ey're very well poised.
Okay, more noises, voices from the financial sector. So as we head into a break, we get you excerpt from CNBC-TV18 IBLA Awards. Former HDFC Chairman Deepak Parekh and one of India's top bankers, Uday Kotak, were in attendance at the awards. Let's hear out what they had to say about the outlook in the future.
No, legacy of customer service, legacy of retail lending. We were one of the first to start retail lending in India. And retail lending with no proper security because, a mortgage is difficult to get back if the person defaults. It's a very long process. Still SARFAESI and other rules were changed and legal issues were taken care of. So it's been a long journey, but I think India has still not scratched the surface so far as housing is concerned. We have a long, long way to go. And now every bank is giving housing loans. So it's a good, because housing creates employment and everything else.
Looks like we are heading for a 6.5% GDP growth. And time has come for private sector to start spending. I think the animal spirits should come in sooner rather than later. I think the first and the good news is we have a very stable macro economy. Hopefully inflation seems to be under control, and even if we hold interest rates here for a while, I think people can take a view that if oil doesn't misbehave itself and things work out well in the rest of the world, if inflation comes under check, I think we should be in for better times.
Welcome back. The Nifty is inching towards a 400-point rally. The Nifty Bank is now a little more than 100 points away from its all-time high levels. Look at that gain on the Nifty Bank. It's 1,400 points and it's still climbing higher and higher. Mitesh is back with us for a few technical calls. Mitesh, in 30 minutes, markets have only gotten stronger. The gains, especially on the banking index, have only gotten more. How would you trade the Nifty Bank now, and any other stocks on your radar?
Yeah, as I said, I think, this is a momentum zone, which means that the markets are seeing a fast pace, which also means that we get overbought very soon. So, but the rally as of now continues, so just trade your stop losses. We've advocated 20,450 on the Nifty. I think that remains. And the Bank Nifty, I think, very interestingly, has had a highest ever daily closing at about levels of 46,230, and we are right there right now. So maybe the Bank Nifty could be the next instrument to trade. If we see a breakout beyond 46,300, then I think take a 150, 200 point kind of a stop on Bank Nifty and prepare for 47,000. So that's the way we'll approach it. And on the stock side, PI Industries is a BTST with a stop at 38.45 and a target of 38.85. And the other stock which I like on the BTST side is Reliance. Keep a stop below 24.04 and look for targets of 24.45.50.
Okay, all right, Mitesh, I wanted your view on HDFC Bank. Reliance, and that's one big weight in there. But HDFC Bank, according to me, that's going to be the big driving factor of December. It's already been quite good, in the last 10 days or so, but it's recovered from around that 1,480 to around this 1,600 odd mark. But that's going to be the big move. And I say that because year to date, if you pull it up, HDFC Bank is still to break into the green. I think it's more or less flattish, a bit of a negative bias, so that should come up for you. It's down 1.5% for this year so far. The Nifty, keep in mind, it's like the star batsman that's not performed, and yet the Nifty is up close to around 14%. Mitesh, help us out with the technical levels you're looking at on HDFC Bank. Large constitute 15% of the index. That's finally coming out to bat, and it appears it's in good form going by the last few sessions.
So, Nigel, we have had a buy on HDFC Bank earlier with a target of 1,600. It's met that today. That was about 3-4 days back. And now it's running into the gap area. But I think the breakout means that the reversal and the up move has just started. So I think this is likely to extend with some volatility. I would now look at a target of around 1665 on the upside, and just hold your stop with a revised stop at about 1570.
On the daily chart, Mitesh, if you look at HDFC Bank, from the 3rd of July high, then there is a high on in September, 15th of September. So there's a downward sloping trend line, and today it's basically it's above it. So it looks like good for more, right, Mitesh?
That's right, Prashant. I think, as I said, I think one, it's broken the trend line. Two, I think all the indicators and short-term averages have crossed on the positive side. Three, there's a gap over there. So I think the stock should have momentum, but one, it's still in that underperformance mode. I mean, today it's doing well, but compared to the Nifty and the other indices, it's been underperforming, and that mode hasn't been reversed as yet. And then there is a pivot. We got the highest ever closing on the 15th of September, around 1662. And then, that pivot should remain as a strong supply point. So that's the target which I'm looking at. 1662, 1665 is the next area where the stock can head towards.
Look at LIC. LIC is up 7% on very large volumes. I think last week LIC was up 10%, and this week, straight off the bat, it's up 7%. So that is, and it's not as if it started 7% higher. It actually was absolutely flat in the morning, didn't do anything at all till about 10:30 or so, and then started to pick up, and it's basically moved almost vertically higher. LIC, that is. Any thoughts here, Mitesh? LIC?
See, LIC, I think that big movement happened, when all the the insurance companies moved, and then we had 3-4 days of consolidation. Today is another follow-up day. I think if you look at the medium-term charts, a very interesting pattern is developing. We've had 2 weekly closings around the levels of 712, which was on the 13th of January, and then we had a closing at 708 on the 15th of July 22. So that 700, 720 band, once it breaks, and I think we're on the verge of doing that, this stock should extend the up move, and the targets which I would look at will be in excess of 800, possibly 800, 820 looks like to be the band where the stock will head towards.
Today, there was a Kotak institutional note on LIC where they're saying this stock has already rallied 10% in the last 1 week. This perhaps is on account of 2 reasons. One, the rally that we've seen in the PSU finance stocks, and maybe there is a rub-off on LIC. And two, there is also hype around a new product that the company has launched, LIC Jeevan Utsav, which is hyped and marketed. And the hope is that can this turn the tide for LIC? Can it drive volumes? And plus, what adds to the attractiveness for LIC is the valuation, because the stock is trading at 0.6 times EV and just 0.7 times core EV FY25. So pretty inexpensive, which is why they have a target price. It's Kotak Institutional Equities has a target price of 1,040. That's a near 50% upside from current levels. But let's get to the market as Dalal Street continues to cheer the outcome of BJP's huge win in state elections of Madhya Pradesh, Rajasthan and Chhattisgarh. Through the day, we've spoken to a lot of market veterans, Madhu Kela, for one, on his take on the markets, the way forward. Listen in.
So Prashant, first of all, thank you so much for having me. I think these are the times which we have been dreaming for the last 30 years, and being bullish in India has really paid off. I can tell you with personal experience. So there are three things, Prashant. One, I think this event to an extent was not anticipated the way it came. Even none of the exit polls, none of the surveys could project this kind of win. So to this extent, I think it's a from a market perspective, it's a positive thing. Second, to my mind, it truly validates the good work which the current government has been doing for 8-9 years. And I think this kind of mandate, will push the development and inclusive agenda much further, going forward. So which is a very good thing from a market perspective. Third, Prashant, I think with this in the bag, now 2024 election, will look much more certain than it has ever looked in the past, that, the current government will come back. And the focus of the government over the last 10 years was, to clean up a lot of things. So next 5 years will truly focus on the growth. I would go little further in saying that, while we talk about next 25 years of Amrit Kaul, so to my mind, next 5 years from a stock market perspective will be the real Amrit Kaul, post 2024 elections. And we're starting now because, now there is a much more certainty. So next few years, Prashant, are really going to be very good for India.
So what should we expect for markets? I mean, today we will get a big gap up. I mean, if you want to comment, because the market did rally 500 points coming into this over the last 4 days, and we'll get a 250, 300 point gap up. Is going to be a big day. But then, more importantly, from here all the way into elections, should we expect something like what we saw in 2014? Rally back then started in October of 2013, but it was very different circumstances. I mean, the rupee was, if you remember, down in the dumps, and it was looking very, the mood was one of despair, which is not the situation right now. Can we have a rally going into 2024 elections, a meaningful rally?
Prashant, I don't know what you call meaningful. From my perspective, it is not a 1-2 month thing. Trust me. I think, I would like you to run through to your viewers what happens to any company once it hits a lifetime high, right? So here the whole market has hit lifetime high, and it has consolidated now for a real big period of time. So now, to my mind, what is really important is what is the, let's say, worst case downside. So we had 18,600, where the market really spent a lot of time, and after it has taken out with a force, and it has stayed here for a long period of time. So Prashant, I think, we are in for a couple of years of very good markets. Now, within this, whether you will have a 500 point rally or 200 point rally, or you will have a 200, 500 point decline, that I'm not unable to comment. But what I can clearly see is a phenomenal time for equity investors. The other point which I would like to mention, see, what is the biggest worry in the market is valuation, right? this is what is holding up people, that the valuations have become too expensive. There I would like to comment on two things, Prashant. One, that yes, valuations are higher than what they have been historically so. But we should not miss a picture that the interest rates are stable, the growth is far more stable, the inflation is far more stable. So obviously, in these kind of scenarios, when there is no volatility in all of that, it will clearly lead to higher valuation.
Got it.
Second, very important point is that there is a certainty of earning. So yes, if you look at it, valuation from a next 12-month perspective, they may look expensive, but there are people who are willing to have a 3-year, 4-year view. So with this certainty of earning in a lot of companies, if you take a 3-4-year view, then the valuations are not looking all that expensive.
So you put some very important points on the table. I just wanted to do a follow-up on that. Everyone talks about how this is a resemblance of the 2003 to 2008 phase. If this genuinely is that kind of a bull run, at what stage of that phase are we in right now? And how do investors approach it? Do you look at domestic consumption? Do you look at capital goods, the spaces that have not worked in a very long time? What's the approach now?
I would say that, as my mentor Rakesh Bhaiya used to say, it is like a buffet. You eat what you want to. Just remember, you don't end up overeating, right? So I think there are lots of good pockets from an investment perspective, but with full disclosure, and this is just, everyone who is listening to me should do his own homework before investing. But I would say the financial space looks very compelling to me from here on a risk-reward basis, because these stocks have not participated in the last 12-18 months meaningfully. So there has been a lot of consolidation while the earnings have kept up. Here, there is a lot of valuation comfort which we have. And I would go so far saying that, we have always liked public sector banks over private sector banks. But now on, the bet is the mix of, public sector and also some private sector banks which have consolidated beautifully. And I would think that, one thing which the market is really missing as of today is the FII flow. With this certainty of election results, I wouldn't be surprised that the FII flows over the next few months really gets resumed. And when that money comes in, it will only go into large liquid companies. And I think banks will be on the forefront of recipient of this kind of liquidity from the foreigners.
Okay, that's Madhu Khela with perspective. Very, very bullish. Phenomenal time for equity investors from here out. That's his view. We'll take a very quick commercial break here. Pashupati Advani of Global Foray will be joining in for more on markets, his views coming up in just a bit. Okay, well, 400 points, almost knocking at that 400-point mark. So gains are sustaining, and there is absolutely no let-off. The mid-cap index is at record highs as well, but it is the best ever performance by the mid-cap index in some times. Hormuz is here to shine the spotlight in that particular space. Hormuz, take it away.
Well, it's no surprise that the mid-caps have been outperformers in 2023. Now, the mid-cap index is also at a record high. It's up 39% so far in 2023. But is it the best ever performance it has had in a calendar year? Well, not quite. Now, for the first 11 months of the year, the index is up 39%. Now, just in the last decade, now if you see 2014, 2017 and 2021 have all seen better returns compared to this year. Now we are in the final month of the year, so how does December stack up for the index? Well, in the years that it has done well, the mid-cap index has risen anywhere between 2% to 6%. Now the index is already up 2% so far this month, and if history and the current market is anything to go by, there is still scope for further improvement. Now let's take you back by around 3 months. On the 11th of September, Kotak Institutional Equities suspended coverage on its recommended mid-cap portfolio. It said that no stocks beyond the BFSI space offers a decent upside over the next 12 months. It highlighted sectors like capital goods, healthcare, QSR and real estate, saying that they are discounting growth for the next few years and leaves no room for disappointment whatsoever. That day, the index topped out for the time being and fell over 4% the next day. But since the 12th of September, it has risen by 8%, while the small cap index has gone one better, going up by 14% since that day. But has this rally been broad-based? Well, as of today, we have 10 stocks on the mid-cap index that have risen 100% or more. Compare that to the past cycles, we had 17 in 2021, 6 in 2017 and 12 stocks, pretty much on expected lines. Now, while Kotak suspended coverage, not all analysts are calling doom on the broader markets. Hiren Ved of Alchemy told CNBC-TV18 on our editors roundtable that one needs to have a 3-year view on both mid-caps and small caps to expect reasonable returns. Now, Vineet Sambre was also on the channel. He said that there is growth visibility in some mid-caps and small cap stocks. So, the rally continues. There may be scope for improvement. Opinions are aplenty, but the market has a mind of its own. And no wonder the last time the mid-cap index ended in the red was back on the 1st of November.
Okay, all right. Thanks a lot, Hormuz, for joining in and giving us that piece. So, well, let's go across to Pashupati Advani from Global Foray, who joins us on the show. Hi, good afternoon, Mr. Advani. Well, what a time to join in, right? The markets are on fire. I don't know whether I've heard so much of bullishness in a long while. Looks like you're on the bull.
On the horse, is it a horse or a bull?
I think you're on mute.
Yeah, so a horse
riding along
doesn't matter. Any animal that's moving upwards, I think that's all of them. So
galloping
I think
ahead.
I think most of the country is happy about what has come out in the elections this last weekend, and the market certainly reflected. And I guess the answer is this government is here to stay. Therefore, infrastructure is a good bet. Therefore, anything that they touch is also going to be good, and also probably good for PSUs for the next few months.
All right. Okay, Mr. Advani, you have watched this market for many, many years, and as you already indicated at the start of it, you're galloping along as well, on whichever animal is it. But what do you think? 2025, 2026, 1 lakh on the Sensex, just want to put a number out there. We've been waiting for this. You would have seen the Sensex at 2,000 as well. But do you think the time has come?
I don't think 1 lakh, but I think, we definitely... See, I'll tell you what needs to change is that FIs have been sellers, FPIs have been sellers. They have to turn their perspective. I don't think we're going to see much of it in December 2023, but we may see a January effect, which will be nice, and that will bring the markets back on track if they start putting serious amounts of money in. We're also trying to do debt issues overseas, which will also be good to bring in money, because at the end of it all, we need money for long-term infrastructure. And I think the rest of the world is comfortable with us being there. So all in all, these are all favorable signs, but we need things to happen. And, sure, the index will continue to go up, but 1 lakh in 2 years, I think is a little over-optimistic according to me.
Within 3 years, it should be possible, right, Mr. Advani? If we're talking about 15% compounding, 2026, it should definitely be closer to that 1 lakh odd mark. Do you think we're running ahead of ourselves?
I think we are. I think, the problem the issue in India is we think big and then we're not able to execute. as big as we'd like to think. But I think that we are definitely in a bullish phase, and now we need the FIIs to turn around and agree with us. This year they've been sellers for most of the year, so now they'll turn, I hope.
We take that caution on board, and they've been sellers so far, and that's reflected in the Nifty Bank as well. Earnings have been good actually, but the Nifty Bank has been a bit of an underperformer. Now, however, it's coming to the party, and the flows come back. That could very well be the place that you'll have to be. How are you positioned? I think in the past you've stayed a little bit clear of financials and banks. Your view now?
So again, I think that the laggard has been HDFC Bank, which has obviously turned, and it's up quite smartly today. And I think that that's the main driver, because that's the biggest bank in the index. So I think that today it's up 3.5%. So that's definitely going to move the bank index. Again, the PSU banks I think will do well. Government wants to get dividends. These are prime position to do it. In a good economy, the loan losses will be less, and banks can take advantage of it. So yes, it's a sector that one can be in. And if HDFC Bank is turning around, then therefore that's the first one of choice, and that's the one that money will come in. It's listed in the New York Stock Exchange also, so that also helps.
Well, at least in the month of November, we've seen some FI inflows into the cash market. They were big sellers in August, September and October, selling anywhere between 20 to 30,000 per month. But in the month of November, so far at least, they've pumped in about 5,700 crores. And today, maybe we will see some inflows from the FIs too, just going by the price action. Pashupati, do you think whenever the FIs return, maybe they return in the month of January, they will look at mid-caps too? Because the liquidity in the mid-caps too, has picked up. Do you think they will chase some of the smaller stocks in the mid-cap universe, or will they stick with the tried and tested financials that they've backed for so long?
So I think most of the foreign money that comes in...
Mr. Advani, we'll just have to come back to you. As we speak, it's a big moment yet again. The Nifty Bank has gone ahead and made a fresh all-time high. We've gone ahead and, knocked on that 46,370 odd. And it's up 3.5% today itself. The last 7-8 days, it's been showing some traction. And the big boy, HDFC Bank, that Mr. Advani was just talking about, big move is what we're seeing out there. And, Rima, this HDFC Bank actually in the last 10 years has never had a single year when it's given negative returns. And year to date, it's down only around 0.5%. That was down close to around 5%, a short while back. So year to date, HDFC Bank does another percent moves. Well, anything can happen to the Nifty. I guess the Nifty will be closer to around the 21,000 odd mark. But that's the big mover. The Nifty Bank making a fresh all-time high. The Nifty making a fresh all-time high on a day-to-day basis, and things looking very, very good.
And just climbing higher and higher, 46,400 on the Nifty. So it's not that it's gotten to that peak level, that summit, and then deterred a bit, given up, a few points, some profit taking. In fact, the momentum is only picking up in the markets now. And even on the Nifty, we're knocking on the doors of 20,700. So that last 100 points on the Nifty too has come in very swiftly. But Pashupati, clearly today has been a very big momentum day for our markets. The bullish sentiment in the markets is extremely high. But you were telling us about the mid-cap action and what we could expect going ahead, and whether the FIs will look to participate in this mid-cap rally.
So most of the conventional FIIs have the bulk of their assets in the bigger stocks, probably 75-80%, and then some of them buy some mid caps and maybe the occasional small cap. So I think that that's where it's going to be. But what that does do is pushes domestics to sell out the big caps and them themselves moving into medium and small caps. And we've seen a lot of inflows in retail investors into small cap and mid cap funds over the last couple of months, which I think is a trend which is, it's a leading trend this time instead of a following trend from retail. That's my opinion. Nima.
No, I mean, in the morning we were talking about how the level on the Nifty Bank is the all-time high, 78% retracement. It is 2 days. It just takes a day like today. I was just wondering, when is the last time we had a 2% rally on the Nifty? A 3.5% rally on the Nifty Bank. Maybe after the, the last big one would be, I think the corporate tax cut perhaps would be the last big one, right? That was late 2019, Pashupati. I think September 2019. The election verdict would be before that. I mean, you have to go back some time. Maybe, one of those sharp bear market rallies during COVID, when it was extraordinary kind of circumstances. So this really will go down as one of the big ones.
Yeah, and I think what has happened is that the voting that has come in has actually shown a confidence that people were surprised at, and I think that as a result of which they are feeling that the existing government will come back and will come back in spades as opposed to just chugging along. And I think that means the policies will continue. And certainly business understands what policies they want to do and are aligning themselves. Now, I heard Uday Kotak earlier on at your award function saying that we need private sector to be thinking about investing. That has not yet happened in a big way, but I think if that happens, we will then go into a different phase. I think that's very positive for our country.
Okay, our colleague Sudarshan tells me that it was October 4th, 2022. So you don't have to go back very far back for that. For a 2% kind of move, we had one on 4th of October 2022. So actually, we'll put that data out. It'll be interesting to see these big moves that we've had. Pashupati, for those who are watching, I mean, you make money by buying stocks. So give us some ideas. What can one, opportunities from here?
I think entire retail seems to be buying Nifty options and riding that bull. Nobody wants to talk about anything. Nobody wants to talk about anything else.
No, but yeah.
I'll tell you, one of the things that have been a big move has been, I am very comfortable, say, in a stock like Reliance. I know they own your channel, but I think that that's something that is a bellwether for India Inc. And I think it would be a good place to be. The Adani stocks are always good for, obviously they'll be benefiting if this government stays. And I think that we've seen that because they've had a huge rise in market cap over the last week, 10 days. And today, big numbers because obviously the BJP looks like it's going to be in power and therefore the Adani Raj will continue. So things like Adani Enterprises and ports would be definitely something to continue. And as I said, anything in infrastructure, government wants to complete by May for sure. And then after that, and I'm presuming the BJP will still be in power, then of course it'll continue. So all the infrastructure companies who are building are in great demand, and along with that, cement, steel, whatever it takes to get there. And I think it's all going to be in like top gear moving. We're seeing that already in the markets.
Mr. Advani, in the past you've told us, I think Jay Kumar is a stock that you've liked from the infra pack, if I remember correctly. HDFC Bank, I think you said it should be part of most portfolios, because it's got such a large weightage out there. And one call, if I remember correctly, I think pharma you were quite positive on. And year to date, actually, that has been, one of the sectors that has done quite well. What's the view from year on? Because the banks now are coming into play. But year to date, actually, the pharma index has done very, very well.
Well, again, I think we are realizing that we've got certain illnesses that makes public have more and more medicines. And as more and more people get sort of richer, they're starting to, and claim on insurance, they begin to start buying more medicine. So that's very good for the pharma industry. And, plus, I know, for example, Sun Pharma's got its act together with the acquisition of the Ranbaxy assets, and now they've got EPA approval to send, FDA approval to send medicines into the US. These are all good things. It's just that today, on a day when everything else is charging, pharma is kind of forgotten. So today it's left behind. But overall, it's had a decent move this year. I think it's up, I think high 20s, maybe %. So it's not a bad place to be. It's not obviously as much as some of the other indices, but hey, I'll take 20% plus. Why not?
But give us two stocks, Mr. Advani. Today we are looking for stocks. Those who want to play options, we'll keep them aside. But a lot of our retail audience out there, they'll say, Mr. Advani has a lot of experience out there. Maybe he's found some value buys. In the past, you've told us about Jay Kumar, as I mentioned earlier. A couple of pharma names as well we have discussed on the show. Leave us with one or two names at least with some rationale.
No, so the rationale is to buy big. I think is probably to buy big pharma simply because they've got their act together. So and still it seems to be that there's going to be some consolidation in the pharma space because there are the companies that know what they're doing vis-a-vis exports, and there are companies that are just drug manufacturers. So I would pick from the large pharmas, whether it's Dr. Reddy's or Sun Pharma or one of those.
Okay.
They're all good, and they will participate in this rally. So why not?
Okay.
All right. Thank you very much for joining in. By the way, today, some of these new age tech companies, Paytm and Honasa Consumer, are not participating in the rally. So Honasa Consumer has a cut of close to about 4%. And in a pull up a 2-week chart of Honasa Consumer, you would see that less than a week back, the stock had gone to levels of 486. And from that level, it's down close to about 100 points. So in the last few days, we've seen quite a correction in Honasa Consumer. Still above its issue price of 326, but from the peak of 486, the stock has fallen close to about 100 points. But Nimesh is here now for D Street Chatter. Nimesh.
Hi, Rimana. What a strong day for the markets. The Nifty is up 2%. The Bank Nifty is up almost 3.5%. And on huge volumes as well. So especially for banks, it looks like it's a combination of both short covering as well as fresh buying as well. So there is some bit of interest back in the financial names by the larger institutions today. My sense is you'll see a large buy figure from the institutions in today's state. So that's something to watch out for in the evening. I guess the other theme seems to be the PSUs. Now, that's been the recurring theme for the last many weeks and quarters now, that the PSUs continue to outperform. That's been the trend today as well. The OMC stands out today. Big moves in the oil marketing stocks today, and of course even the defense names are doing good. So PSU as a theme continues to be well bid, and there is a lot of interest as well. I guess from a directional point of view, looks like the momentum can continue, and this rally now from here on can be largely led by financials, not only from short covering perspective, but from the fact that there is fresh buying as well from the larger FIs.
Got that. All right, Nimesh, that's the entire setup. But what about individual stocks? What are you picking up?
Well, as I said, the big theme is financial. So that's my first stock, SBI. After many months now, there's some bit of interest seems to be back in that particular stock. The delivery-based buying will be quite high in SBI today, and I understand some long-only funds seem to be quite active there on the buy side. So that's the first name. The second name is IOC. It was part of my list last week as well. Entire last week, you saw a lot of OMCs doing good, and IOC stood out in terms of delivery-based buying. That's been the case today as well. So that momentum of buying continues from the larger institutions. And additionally, Morgan Stanley today had put out a tactical buy note on HPCL and BPCL. The OMCs overall has done well, but IOC stands out in terms of large buying interest. The third stock is SAIL. Within the metal names, this is one stock which has largely been bid by some domestic mutual funds. In fact, a leading domestic fund seems to be quite active buyer in SAIL, and hence that stock should be in focus largely from a delivery-based point of view. And the last one is Jubilant Foodwork. In a good market today, that stock is marginally under pressure, but the overall flow feedback is there is buying interest in Jubilant Foodwork as well. In fact, one large fund seems to be an active buyer in that fund, in that particular stock, and hence from a delivery perspective, even Jubilant Foods seems interesting, because the fact is there is some bit of buying interest back in that stock as well.
Barbecue Nation is up, I think, about 8-9% in the morning. It's up about 4-5% now. And the Jubilant Foodworks, as Nimesh mentioned, there is some interest coming through. So SAIL, Jubilant Foodworks, IOC, SBI is on Nimesh's list, so we'll keep an eye. We'll take a quick commercial break here. As always, we get you what to buy or sell today for reverse trade tomorrow. We'll come back after a break with that.
Welcome back. Smaller banks as well participating now. RBL has spiked up to the high point of the day, and you have a couple of other notable movers in the last few minutes. Pull up the intraday chart of Crompton. That's up only around 2%, but bulk of that move has come in the last few minutes. So stocks actually ending the day's high is always a good time for the markets. Well, Mitesh Thakkar is back with us. Mitesh, what do you have for us in terms of a buy or sell trade?
Nigel, I would recommend the SBI twins, SBI Life and SBI itself. I think SBI, I would recommend a BTST with a stop at 588.5 for targets of 605. And SBI Life, we have recommended the stop earlier as well. Continues to make fresh highs. That's a BTST with a stop at 1440 for targets of 1475.
Okay, SBI and SBI Life, both are BTSTs. Mitesh, thanks very much for that. There's 15 minutes to go for close. But here's some more opinion that we got earlier. This is Ramesh Damani, member Bombay Stock Exchange. I spoke with him earlier on Friday evening. I also had the chance to interact with Ramdev Agarwal of Motilal Oswal Financial Services. This is, of course, before the election results, but the view, I think, holds very, very relevant, because the view is for the next couple of months and even for the next couple of years, sounding very bullish on prospects for the Indian market. Listen in.
I'm pretty sure the next 20,000 points are up on the Nifty.
The next 20,000 points?
I'm not saying it's happening in 3 years. I'm saying in my lifetime, if the others is 40,000, then go down. I mean, it's just onward and upward. We remain bullish. And last 30 years, what has it taught us? Remain invested in Indian equities, because that's what will, earn you a superior rate of return. So I don't mean that facetiously. I'm saying the next leg is higher for people. So by the time a next generation comes on this platform, the index will seem even higher. Next 2,000 points can happen anyway. That's what I call volatility in the market. I always believe that every bull market has leadership. So in 92, it was the cement stocks, 2000 was the technology stocks. I personally started to believe that the leader in this bull market is the public sector stocks, because they were so cheap and so unloved, and they're getting better corporate governance. I think one thing the center has done is get better corporate governance out there. A lot of the telephone banking is over. A lot of the corruption seems to have diminished quite considerably. So if there's leadership, you can see the leadership stocks in technology or in software or in cement. The stocks go up 20, 50x sometimes from the peak. ACC went from 100 to 10,000 rupees. Okay, so I think the leadership is there. So I think you may not want to buy a particular defense stock now because it's gone up so much, but the gas, housing, there are lots of opportunities available. So I think I would allocate part of the money to the public sector stocks because I think they're the leadership. And if you miss them, I think you're going to feel the pain somewhat in returns.
Greatest bull market was in 90 to 92. We were just about, we had become member of Bombay Stock Exchange. We were very young, and we knew very little. I mean, except for PE and EPS, I think we didn't know any of the ratios. And market was about 600-700. I don't think there would be any market in a space of 2 years, it would have gone up by 7x at index level. My sense is the bull run today is of that order. But thanks to SEBI, thanks to all the discipline, DMAT, T+1 settlement, all kinds of control we have on everything.
Okay, that's as bullish as you can get. Ramdev, you're basically saying that we'll have a bull market, the order that we got in back in 1992. May take a little longer, of course, because of the speed brakes, which are, of course, essential as well. Much better regulated market, etc. But we'll take a quick commercial break here. Gurmeet Chadda of Complete Circle will be joining us on the other side with more. Coming back.
Welcome back. Market's doing well. We're almost at 20,700 and it's a beautiful looking screen. When the final tick is going to be at the high point of the day, you're going to say, well, we expected a good session and it's a very, very good trading session. Gurmeet Chadda joins us to help us out with some analysis. Hi, Gurmeet. Gurmeet, the big stock, the highest weight on the index finally moved today. HDFC Bank. It wasn't a matter of whether or not it's going to move. It was just when will it move? What's your take at around 1,600 rupees on the stock?
So Nigel, actually, all banks, private banks, for last 6 odd months, with the exception of Axis, I think, haven't done well. If you see, HDFC Bank is now at about 2 book value, 15 times forward earnings. You had SBI at 7-8 trailing P. Although I know the P is not the right multiple, but less than 1 book value for SBI as well. Bank of Baroda at probably 5.5 times. ICICI Bank also almost consolidating for almost 6 times. So I think with credit to GDP at 50%, I think it was due any good sentiment. In fact, I would like to track the FI numbers today because whenever FI has returned, the private banks tend to do well, which is what is getting reflected in Bank Nifty. Also, I think with RBI coming down a little bit on unsecured lending, I think some of the allocation will shift more to private banks. A, because of valuation. Second, because of the regulator being a little concerned over unsecured lending. It may not really impact the gold financing NBFCs, the affordable housing names, but ones with large unsecured book in the near term could see additional capital and allocation and provisioning being done, and that could impact even the sentiment as well as the performance. So some shift should happen there as well.
In the FMCG pack, a stock which hasn't performed as well has been HUL, especially when you compare it to ITC. ITC was a big mover in 2022, and even in 2023, year to date, ITC has a return of close to about 37%, while HUL has only rallied 1.5%. So HUL too has gone through a fairly longish period of underperformance versus ITC. How would you stack up the two from here on?
Would still prefer ITC over HUL, A, because of valuation. ITC also has corrected 10% from 500 levels. Then you have an unlocking opportunity with hotel business getting demerged. Eventually, I also believe FMCG business will get demerged. Core performance has been solid. The cigarette volume growth has been very good. Also, the smaller cigarettes have come down as government has kept the excise in check. It's not too prohibitive to encourage smuggling. FMCG business now is double-digit volume. Margin, other than obviously they're pretty doing well on volumes as well. HUL, I think largely because more than 40% comes from rural. I think you probably need to see more action there. I think the current festive season probably tells you that there's some bit of recovery. Very early days to say that. But with government getting a good mandate and a lot of these states, MP, Chhattisgarh, Rajasthan, are largely rural in the heartland. You will see more initiatives on the rural side, including MSPs, including more cash transfers, etc. That should see an uptick. In fact, we saw the two-wheeler numbers. They were the best ever after a long, long time. So some catch-up maybe is due tactically in names like HUL, Dabur, etc. But if you take a 3-year, 4-year view, more comfortable at 25 times with ITC, 5% dividend.
Even, we chatted with Shriram Finance and we were asking them about the individual segments. So on two-wheeler financing, what he said is that November has been one of the best months. So they financed 2.4 lakh units in November. And for this quarter, October to December, they're likely to finance about 5 lakh units of two-wheelers. And this on a like-to-like basis, considering festive season, could be an improvement of 25% on a year-on-year basis. So there has been a substantial pickup in the rural markets, particularly led by two-wheelers, though CV is still not back to what it was earlier. All right, Gurmeet, in the NBFC pack, which segment would you back? Which are the stocks that you like at current levels?
So, we like Home First, being early investors there, been pretty lucky, 4% ROA, 15-16% ROE. If you see last 8 quarters, they have been increasing disbursement 6 to 8%. You see the credit cost, it's contained at about 30-40 bips. Also, if you see the stage 3 assets, that's again at about 1.3, 1.4. Average ticket size is about 10-11 lakhs, and they've stood one COVID test. Guiding still for 30% growth. Not very cheap, almost at 4 times book value at these valuations, but very steady play. I think housing in particular, I'm extremely bullish. See, the overall home loan book for the entire industry is 30 lakh crores, of which HDFC and SBI make up 12-13 lakh crores. for a country for 1.4 lakh, 1.4 billion. I mean, this is too low a mortgage book. I think it will grow. There's a government push. There is a urge to, there's a aspiration to own a house, and there is a subsidy on the Awas Yojana as well. So very structural. So that's what we like. I'll be a little wary of NBFCs in the near term. Because there's been a good run up in the likes of, let's say, Poonawalla, etc. Because RBI is a little concerned on unsecured lending, so that might draw some more flows towards private banks, which are more reasonable. In the interim, I might just stick with housing finance for now, and maybe later on look at some of the NBFC space once maybe valuations become more reasonable.
Okay, all right, Gurmeet, very quickly, Tata Technologies, it ran away too fast?
Yeah, I mean, we bought a little quantity, Nigel, on today when it was down 5% early trade. That's the only stock I saw in red. So starting to add a little bit. As I said, I'm very bullish on digital engineering as a space, and as low as I can get it, I'll be happy if I can get more corrections.
Okay, all right. You already had KPIT, but you told us you were interested, so I just thought we'll check on that front. Thanks a lot for that, Gurmeet. By the way, let's wind down markets. Very, very good trading session. 420 points on the Nifty. The big gainers today, Eicher Motors. Well, that one was thumping ahead in trade. The Adani Group stocks did well. Adani Enterprises as well as Adani Ports were up and about. BPCL was up close to around 5.5%. But really, the stocks that drove the markets higher were the big boys. ICICI Bank, SBI, and HDFC Bank seems to have found its form. So that stock as well did very, very well. On the flip side, you had a few stocks that were under pressure. Tech saw some bit of a pullback, or was a relative underperformer. HCL Tech, Wipro, as well as TCS, ending mildly in the red.
Well, absolutely stellar day, Nigel. And, so we put out two levels in the morning. One was 20,700 as a medium-term target. Well, guess what? We are there today in just one single day. The high today is 20,702. And then we put out another level, which is Bank Nifty, which is